Your financial advisor might be lying to you. I'll tell you exactly what I mean in this video. I know very well that if you're not someone who has a financial background or education, then the world of investing, managing assets, stocks, bonds, commodities, currencies, all of these things seem very complex and very difficult to understand. And as a consequence, most people believe that they need a financial advisor or a wealth manager to manage their investments because they can't do it on their own. Now, that can be true if you're an extremely wealthy individual with hundreds of millions of dollars or even billions of dollars of net worth. But if you're just a regular person, then it can be very, very simple to manage your own investments. But of course, financial advisors and wealth advisors do not want you to be managing your own investments, because then they cannot make a fee on their work. So these type of services usually take a small fee, let's say 0.5% up to 1.5 or 2%. That is how they make their money. So essentially, they are incentivized to make people believe that they don't have enough time to manage their own investments, that it's too complicated, it's too difficult, it's too time consuming. There are all these intricacies that they can't do on their own, and so they are incentivized to make the task of investing seem difficult and complex, because then you would hire them to manage your money and you would pay them their commission. Now, as I said, if you're a really wealthy person, that might be worthwhile. If you're a regular person, that 1 or 2% commission can cost you a lot over 10 or 20 years. I believe that everyone can invest for themselves, and it can be very simple and take very little time and be completely passive. So you do not need to pay anyone any fees. You just need to invest a little bit of time to learn how to do it on your own. I'm going to show you right now what happens if you choose to pay an advisor over 10 or 20 years. How much money will that actually cost you? Okay, so I've opened up a little bit of a chart here that I want to show you, and I'll explain exactly what this is. So let's say that you have invested, or you have money to invest, which is $500,000, and you want to invest that over 10 years. And the average stock market return is 7.5%, and very likely that your advisor would offer something similar depending on the tools and the assets that he picks. Now here you can see between year 0, so when you start investing, and year 10, which is the end of your investment time horizon, we have here a 1 or 2% tax drag. So what is that? That is essentially what you will pay your financial advisor depending on what he charges, whether that's 1% or 2%. So if you have no tax drag, which means that if you invested yourself, you're not paying that 1 or 2% commission to your advisor. So at the end of 10 years, you will have $1 million. But if you've paid an expensive premium advisor 2%, you would have $854,000, which means that you would have paid your advisor $177,000 over the course of 10 years. That is quite a lot of money. Essentially, that is 17% of your portfolio. Would you like to pay that much to an advisor? I don't think so. Of course, maybe you found a cheaper alternative, 1%. That still would cost you almost $100,000 over 10 years. Because fees and taxes and commissions, those compound just as much as your investment does. So if he's charging you 1% per year, then on the next year as well, 1%, 1%, 1%, that compounds. So this is how much money you can save by investing yourself. And like I said, all it takes is a little bit of time to learn the basics and just pick a very simple strategy. Let's say like Warren Buffett recommends, just put in the S&P 500 and forget about it. And of course, Warren puts his money where his mouth is. He has instructed the people who manage his estate to put 90% of it in an S&P and index fund. And when you put your money by yourself in a low-cost index fund, this is exactly the type of stuff that you're saving. Because if you choose to have a financial advisor or a financial consultant, he will basically do the same thing. So you will put a middleman between you and your investments, and that middleman will charge you 1% or however much percent, which will cost you this amount. So just take away the middleman and do it yourself, because you can do the same thing he does if you invest a little bit of time to understand index funds. Let's see the same picture, but for 20 years. So the same amount invested, but for 20 years at the same rate, which is 7.5%. Obviously, that's a bit of a longer time horizon, but if you invest by yourself, you'll have 2.1 million. If you have a financial advisor or somebody who you're paying higher fees, so for 20 years, with a 1% tax drag, you have almost $400,000 in costs, which go to that management company or that advisor. That is a lot of money. And if that cost is 2%, then you have $665,000 in costs over that period. That is a huge chunk of your gains. Do you want to be paying that? Okay, so the point of this video is very simple. You can save a shit ton of money by investing a little bit of time into self-educating about index funds and investing in those instead of hiring a financial advisor or a company who will do the same for you but charge you a little bit of fee, because that fee compounds just like your investments do. So again, if you're a very, very wealthy individual, maybe this makes sense for you. You would be investing in alternatives, niche products, hedge funds, all of these kind of very specific type of asset classes. But if you are a regular person, then paying these high fees just doesn't make any sense to me. Select an index fund or some kind of a fund which has low fees itself and just invest in that. That's it for this video. I hope it has been useful, and thank you so much for watching.